All right, welcome back, guys. I hope you have all had a good day and you didn't get your hands chopped up too much on EU if you trade it, because today was another day like Wednesday, Tuesday, Monday, Friday, and Thursday from the week before. Nothing too exciting. Similar conditions. You can see we're stuck within this range. We have this kind of higher time frame range that's going on, and then we have this range that's been forming over the last week or so. So not really much to um, cover in terms of higher time frame analytics, right? But the lessons that are being extracted on a day-to-day basis are very much similar, right? Because we have the same higher time frame condition, which leads to the same kind of management which needs to be done. And yeah, so I'm sure these will get a lot more exciting once price decides where it wants to go next, and we get a breakout eventually to one direction or another. And I think that will come pretty soon, just due to the nature or the state of the market right now. When we see price get lower in volume and volatility, liquidity tends to move away from the surrounding current market price, and price becomes a lot more illiquid in the books. We need to start seeking liquidity at more distal levels in order to fill large orders. So without further ado, let's have a look at what we were looking at on the higher time frame. So from the daily perspective, you see that we are more or less ranging between this distal and proximal line right here, right? No, not much different from the last couple of days. But yesterday we end up closing back above. You see that this midpoint has acted more or less as a cap to price, right? We tried to trade above it on Thursday and we fail. Friday we fail. Monday we fail. Tuesday we fail, and then Wednesday pops back above, right? Not to say that this is some kind of sign that we're going to go higher, but it's showing that volume is being transacted at a higher price, and the next most logical level for price to transact to becomes this high over here. So on that kind of daily playbook, right, if you look at it from that kind of simple perspective, you see that cool. Daily has taken out this low, right, because we're more or less in this daily candle range. We've taken out this low, right? We've injected liquidity, quote unquote, right? We've delivered higher, closed above, and then this becomes the next logical level that price can begin to trade towards, right? So you see that that kind of candle range theory play right there, where we've taken out the lower end, we don't manage to move lower, we get this kind of expansion to the upside, and now we want to start targeting that buy side liquidity up here. So that was the kind of thought process from a very basic level when I came to the charts this morning and after yesterday's close. So that sets up what we begin to look at on our lower time frames. So heading over to the 4 hour, and we'll just go back a bit, going over to here. So just as London started to open, you can see that we were very close to this buy side liquidity level up here, right? So that's BSL, very clear. You see we get this imbalance which gets induced last night. Bang. We get this very much liquid PA, and this turns into kind of sell side liquidity pool within itself. Right, bang. So you can see nothing is super ideal here. We're coming lower. We're not seeing any bearish follow through. So this is something that I've been mentioning quite a few times, how we have this bearish imbalance which price tapped into to make this move lower, right? We created bearish arrays, we tap into those, we attempt to push lower, we don't, very liquid PA, no downside follow through taking out this low, right? So once we start inducing this array, coming back above that, body close above, leaving behind new bullish arrays, right? Then the thought process becomes, okay, cool. If we're not seeing any downside follow through off of this most recently created array, we'll most likely see price trade into this level, into this array, and then towards this level and this level that we have here, right? So that was, again, the thought process going into this morning. This array was created in the New York session yesterday, so it held quite some weight, right? So that becomes this we can change to faded, get rid of that. Right, so as much as we had this in mind, horrible drawing. Right, as much as that was our play, we very much understand that these lows are not the strongest, right? And they get confirmed as stronger lows once price body closes above this level here, because then we're starting to confirm bullish order flow, right? So right now, at this point in time, we were not strong with our direction to the upside, but that was the narrative we had. It's the most logical narrative. This becomes the path of least resistance. We have no arrays that are capping price right here, other than this, which had already been used, right? And you can see how that comes into play once more. So yeah, the only other thing I can say is that this whole area here is some kind of volume region, right? So if we go over to futures, right, and we take the volume tool from here to the low, right, you can see in that leg down, this is where the bulk of that volume was held, right? This whole region, to be honest with you, right? But if you look at the highest node, it's this one right here, and you can see how price taps into that, pushes away, taps into that, pushes away, and it's finding some kind of liquidity there to absorb this buy side pressure, right? So that is what we're looking at just there. All right, so that translates into this area which overlaps with this bearish imbalance. And yeah, so that is what we're looking at. Cool. This can be an area where liquidity gets distributed after this bullish move. We now need to come back into the range so we can set this tool up, right, from this low to this high. Right, EQ, so we want to see price trade below EQ and then, you know, start injecting liquidity to the upside. So now if we will will the market, will this now let me, it was trading view, let me batch this up? Yes, it will. So we can rename this as H4, so right, so you see that there, right? And the if you take it from the entire range, right, you can always split it up into multiple different ranges, but this push up, you can see that this, we've already tapped into EQ. So from this low to this high, we pull back below EQ, right? And then we start forming low, high, higher low, higher high, to keep it real simple, right? So we're back in the premium end of this range. We don't have any arrays that can distribute, that can be used to distribute liquidity. So we're now targeting these highs up here, right? Let's just get this back to where it was. In fact, we can keep it there and just amend it on the hourly. So bang. Now, going into the hourly, you see that that 4-hour array, right, that lines up there, and all you want to start doing is, as you go into these lower time frames, is just refine, right? So that turns into this. You're refining that region right there. You can see that it then overlaps with this imbalance to the downside, which gives us this BPR, right, as again a refined entry point that we can look at. And you see that this becomes some form of buy side liquidity pool that we can begin to target, especially when it was formed, because it was formed during Asia and didn't cause any significant lows to be formed to the downside, right? So that's what we're looking for. And just to drag it along. Right, so we're looking for price to trade up there. And then we obviously have Asia high, Asia low sitting nicely just here and here, right? So from an ideal perspective, let's just get this in there as well. You see that there's no arrays in this leg, right? Nothing to really hold price. So this becomes low resistance liquidity that we want to take out, see price tap into this, and then begin to trade higher. Very nice. And then you can see that that's coupled up with the fact that this high was formed in Asia. This high was formed in Asia, right? These are levels that we want to trade into and towards, not away from. Okay, so the blueprint for the day here was, take this out, tap into this, start delivering higher. Nice, right? Very nice. So if we play price, let's read it at a candle at a time. So we get standard Asia, low liquidity, low volume play, or not plays, but state of market. We push lower, right? We attempt to we see sellers get absorbed at Asia low. They don't manage to do anything substantial. Buy step in, slamming price lower. Right, we get another push down, leaving behind this bearish imbalance, like so. And then that is probably all I'm going to do for the hourly for now, right? Because this is where we start dropping to lower time frames when price starts tapping into that array right there. So I'm going to batch that into EURUSD H1. Boom. And we want that only to be visible on the hourly time frame. But we want to take these two and allow them to be visible. Okay. Allow them to be visible on the M15. Right, so now we go to M15 and look, we've got that hourly printed over here. So if I just move these along like such, you can see we get hourly imbalance over here. We're now trading in this POI that we had marked out. We're taking out these levels of liquidity down here, right? And this is when you start paying attention to price delivery, right? So areas that you want to have marked out over here are this bearish imbalance, and you see price gets relatively liquid down here. If we just mark out Asia low, and then Asia high, is there anything else I'm missing? You can see that price leaves behind this very hidden imbalance, which it taps into, right? Injects liquidity, pushes price lower, leaves behind. So all this is bearish flows, right? Because we take out this interim high right here, right? Get liquid PA. Then as we start to open up 7 a.m. European markets open, and we get this injection of liquidity into the books, which pushes price lower, right? We get this new bearish imbalance that forms. So order flow is very much bearish at this moment in time. And now we're transacting into this POI. We want to see the reaction that we get from price, right? So boom, we're sitting around, nothing really pops out here. Bang. Now this is where you start to look to get involved, all right? Because look, we've tapped into the midpoint of the imbalance, the BPR, and this is some kind of shift, right? However, you have to understand this isn't M15. You kind of learn this through visually seeing it over and over again. This is an M5 shift, right? Yeah, so that you can take this one or you can take this one, right? Now, you can see it's not ideal. This is not your high probability trades. I'm pretty sure I took this one. So as price started to shift through this, right, just because we was in that POI, and the fact that the standard kind of thought process we have is, if we're taking this shift, you don't want to be taking this into opposing arrays, right? However, we have no opposing arrays in this leg on the M15. So where the trade idea collapses on M15 is this, right? So there's nothing here to stop price from, trading higher. On the H1 now, we have this bearish imbalance, right? This very small bearish imbalance, which hasn't formed yet. So at this point, the H1 hasn't closed. I'm not too bothered because this can easily just do this, right? And then from a H1 perspective, again, this becomes an area where you need to be careful because you're trading M5, M15 into an opposing H1 array where your idea can collapse. So these are the areas you need to be, fully aware of. So I'm saying, cool, if we go M5, I'm playing this. So I play that shift and I'm playing it aggressive. It's the same as I said yesterday, where I'm getting in, right? So I get in on the shift. My overall target is Asia high, right? But I understand the barriers in the way of, this trade. Again, M5, you see that this imbalance is really quite significant. So if we pop this to the right, boom. So you see that this is the kind of play, right? A very large risk to reward. This isn't usually, this is never really a good sign when your risk to reward is that high, right? But then you turn to areas like this and you say, okay, cool, this is somewhere where I can definitely scale out some of my position, right? So let's begin to play price a bit more. So you see price breaks up, right? We break up again, we leave behind this bullish imbalance, which is always nice to see. And then we leave another one, I'm pretty sure. Yeah, bang. So then we get this. Now, this is where I got not a scaling, but I entered on other accounts, right? So this was my more risky play. Now we've got that full shift, right? And now that I think about it, in fact, let me just check. I'm trying to remember which shift I actually played. Yeah, so it was that first one. You can see that there. Right, literally as price was coming above this, I entered a bit later than I wanted, but it's there, right? So the entry was actually somewhere like this, right? But it was based on that. So that was that. And then, so I started looking for entries on my, lower risk accounts here. Now that we had that clear shift, M15 was clearly flipping bullish, right? And even leave behind an M15 imbalance, bang. So then this was my entry, right? We don't get tapped in just there, right? But then price ends up tapping us in, bang, I'm in, and you see price starts to trade higher. So again, this wasn't all on one account. This wasn't two positions split over one account. It was one position on a lower risk account, on a higher risk account, and one on a lower risk account. In terms of here, right, you don't have much information for this long. It's very risky. You're going off M5 more or less plays, right? This isn't an M15 shift. You haven't got clear lows that are printing and getting not isolated, but prices trading away from them and then running them, right? So this is very much, you enter and you have to be very aggressive and adapt as new information is being printed, right? So we get this now, this becomes somewhat protected, right? Because we have arrays in the way, order block imbalance, double imbalance, to protect our stop, right? So this is what we're playing. I'll take this off for now just to keep it clear, right? And then looking at H1, okay, cool, this is that H1 imbalance right here. How do we play? Right, you see we tap into that. And at this point, I wanted to see, again, from that kind of refinement standpoint, I wanted to see this get traded into. Right, so I was looking for either this or this, right, that proximal line. But at the end of the day, right, I took this half a bullet. So I wasn't risking 1%, I was risking 0.5%. And at this point, when I'm sitting here, I didn't really want to take I didn't want to close half the position. And I also didn't want to close 25% of the position on one of my accounts. So on my challenge accounts, I actually did close 25% of the position. But since February was so slow, I kind of got ahead of myself and was trying to hold my not private capital, but my track record account to this, right? To kind of get the numbers up for Feb, which is never a good sign, right? Especially in the conditions we're in. Reality is, knowing that we've got that sideways PA on that higher time frame, knowing the wind's not in our backs and we're not, we don't have that higher time frame momentum to back us, 25% should have been taken off here at least, right? That's a, lesson in my books. Yeah, and this is the thing, right? When you're in the trade and price is doing all these things, you always think, this is going to be the one that causes price to break out until you get, until you learn the hard way. And you always learn that, right? I've known, I know this. But when you're in that moment, there's times that come around where you get sloppy, right? You get a bit sloppy with your management. Like, everything here was perfect, right? But I should have just taken some off the table on that account. But it is what it is. So you see price ends up trading into that imbalance and we induce it. So at this point, I'm thinking, look, this is more or less inevitable. And that's never a good thing to start thinking, right? You see, we induce this bearish imbalance, which is giving me all the extra confidence to say, cool, that we're going to revisit these highs. And again, you see here, we get a bullish imbalance, which then overlaps. That's nice. Which overlaps with this. All right, so we've got this kind of stacked array right here. And you can see that we get news at 1:30 and quite delayed. This doesn't happen directly on 1:30. At 1:30, when the news came out, price was hanging around, and then maybe 5-10 minutes later, it dumps like this, right? We then begin to transact in this area of volume, right? This fractal OB. What am I looking for? Right, and then once you start seeing this on your H1, this is never a good idea. Like, we just slightly induce the bearish imbalance, and then we get this, injection wick. And price, pushing lower. But at the end of the day, I just rolled my stops to break even, right? Which was on all the accounts. One was here and one was here, right? And I just thought, cool, we'll just let it roll and see how it goes. Right, so then at this point, we've got this bearish imbalance which gets induced. So this whole time I'm thinking, there's still a possibility that price can push higher, right? We haven't really taken out any area of liquidity. The only thing we tap into is this, again, fractal OB. And these are areas that you should be taking out partials at, right? You should be taking out partials. Yeah. So we tap into this area of volume, right? You see where we have multiple body closures within this range. It's very different to this kind of move. This is very much liquid compared to more illiquid, right? And then we have this imbalance, which I'm saying, okay, cool. What kind of shifts this back into our favor is if price injects liquidity and closes above this array, right? If we can induce that array, then, we'll be back to the upside. So we go play a candle. You see we get this kind of injection wick right there. Right, injection. And I'm saying, okay, cool, this has possibilities to go higher. We start trading into this imbalance and we induce it, right? But then what happens here is we get divergence with DXY. And at that point, that's when I start saying, this could go wrong. This could go wrong. Right, and once again, I didn't think to take partials at this level. Really should have. And you can say if I play it, right, we leave that imbalance to the upside, and then price comes down. This whole move didn't happen like in a flash. Price kind of just started pushing. If I go to the 5 minute, you'll see that this kind of drops down here. And then once we came here, I was out. This was quite a slow move. It looks like it happened very fast, but it didn't. Yeah. Then we came to my break-even levels, bang, bang, bang. And yeah, you see that we get this big push down. And that's just part of the game. This is just the conditions we're trading in. Shouldn't have expected anything different. All right, if we flip over to DXY. You see that divergence area becomes this. Right, and we're more or less building this trend line liquidity right there. Boom, 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 and yeah, and it was just all pretty tricky because look, we induced this bullish imbalance from here, we closed below it, and at this point you're thinking, cool, we can just take this out. This low's formed in Asia, you know, this is more London highs. Like, I want to trade away from this and into that, and it just doesn't play, and it is what it is. It is what it is. We didn't lose on the day. So if I show you MT5 screenshots, not screenshots, but you can see that's how we ended up on the day. All right, so I buy here, sold there. That's stop loss break even. So that was that. That was that. Is there anything else